Today I'm going to talk about 7 stocks based in Singapore to celebrate our Singapore's National Day. I will also share about their growth prospects, the valuations compared to the peers, and give my personal opinion at the end of the video. But before we dive into the first stock, I would like to do a shout out to my friend Wen Zhen, right, who lent me this nice microphone, alright, after hearing that my audio recording wasn't that good in the past video. And if you find this audio better this time round, please let me know in the comments down below so that I will continue using this microphone going forward. So thanks everyone. Okay, for our first stock, we have our favorite local bank, DBS Group. Right, DBS Bank is the largest bank in Southeast Asia and one of the world's most valuable banks. It acquired Postbank in the past and has become our Singapore's de facto bank to go to, and it is majority owned by Temasek Holdings. The future growth prospects are promising as it has launched several initiatives to tap into new opportunities, such as expanding their presence in India through the acquisition of Lakshmi Vilas Bank and launch of a digital bank. Okay, and it is strengthening the foothold in Greater China through the acquisition of Citibank's Taiwan consumer banking business. And last but not least, DBS also is the first bank that launched a crypto digital exchange catered towards the accredited investors and family offices. Valuations wise, DBS Group had a price to book ratio of around 1.5 times. This is slightly higher than the industry average and our two local banks as well, UOB and OCBC, at around 1.1 times price to book. Okay, it is also much higher if you compare it to global banks like Bank of America and Wells Fargo. So it may indicate that DBS Group is slightly more highly valued by the market, possibly due to the strong brand reputation and the growth potential going forward. Next, the Singapore Airlines is the national flag carrier of Singapore, and of course, is the world's leading airlines. SIA also has a diversified portfolio of subsidiaries and JVs such as Scoot, Silk Air, and Virgin Australia that cater to different market segments and regions. Similarly, it is majority owned by Temasek Holdings with a 30.5% interest. SIA is renowned for their high quality service, premium brand image, and a strong network. On that note, it benefits from the strategic partnerships with other airlines, such as the Star Alliance network and code share agreements. Okay, SIA's future growth prospects are also promising with the recovery of air travel demand and ongoing expansion beyond Singapore. In fact, it is one of the first few airlines to rebound and take the lead, given how well Singapore has managed the COVID situation. An airline is a capital intensive one, so we will use price to book ratio in the valuation case. And right now, SIA's price to book ratio is around 1.5 times, surprisingly lower than the other global airlines like Delta Airlines, Air China, Ryanair, and more. This is also despite the share price rebounding from the COVID period in year 2020. Stock is Singapore Exchange, the only stock exchange in Singapore and one of the leading market infrastructure providers in Asia. Okay, other than the stock exchange, SGX has diversified into other products like derivatives and indices trading as well as ESG offerings. Again, Temasek Holdings has a 23.4% majority interest in SGX like the other Singapore stocks. Okay, SGX economic mode is obvious in this case since it is the monopoly, right, that controls the whole range from listing to trading to settlement for a range of products, financial products like stocks, fixed income, commodities, FX, and more. Okay, and in our point of view, right, SGX is likely to experience steady growth through several initiatives, including the launch of FTSE, Taiwan, and China futures, the acquisition of BitFX, a leading cloud-based FX trading platform, acquiring of Scientific Beta, a leading smart beta index provider, issuance of green bonds, development of ESG indices and ratings, and more. At the time of this recording, right, SGX P ratio is around 20 times as compared to other stock exchanges like Hong Kong Exchange and Nasdaq. Alright. Although this means that SGX somewhat is undervalued versus the peer average, investors may also say that SGX is limited by the small economy size of Singapore, right? And we have also seen very few local IPOs too. Okay, so if you have been enjoying the video thus far, I hope you can help me to smash the like button and subscribe to our channel for more of such insightful stock analysis videos. And to show my appreciation, here's some fireworks for us to enjoy together. Next up is ST Engineering stock, one that all NS men will be familiar with. While ST Engineering was established in 1967 as an ammunition manufacturer, it has evolved over the years to become a global tech and engineering group that operates in the aerospace, smart city, defense, and public security sectors. With the close alignment to our nation's defense, it is no surprise that Temasek Holdings owns a controlling 49.88%. Okay, and analysts are projecting a positive outlook for the company, driven by inorganic growth from Transcorp, right, a toll company, and the recovery in the commercial aerospace segment. ST Engineering order book also shot up to a record high 25.4 billion as at the end March 2023. Valuations wise, ST Engineering is trading at around 21.6 times P ratio in the medium of the aerospace and defense peer companies like the loss-making Boeing on one side and military companies like Lockheed Martin and General Dynamics on the other side. Our fifth stock is none other than Singtel, our flagship telecom in Singapore. With the strong cash flows generated in the earlier days, it has built up a diversified portfolio of subsidiaries and joint ventures, such as Optus, NCS, Airtel, Trustwave, and more. Okay, you can see from the picture here that while Singapore is more or less saturated, the regional associates in India, Indonesia, and Philippines have much bigger population and more room for growth. Apart from Temasek's whopping 51% stake in Singtel, CPF also owns another 4.7% interest. So effectively indicating that Singtel is our homegrown local stock. As for the future growth prospects, Singtel has embarked on a strategic reset, and it centers around three key tenets. First of all is to expand the regional data center or RDC into developing countries. Second is to capture untapped digital growth in the 5G era. And thirdly is to work on the digital bank as GXS, the one that they are doing with Grab at the moment, which has gained a lot of traction recently. And when I check out the valuations of Singtel, I noticed that Singtel is trading at around 18 times PE ratio. It is only cheaper than StarHub at the moment because StarHub has not really been performing well, but Singtel is actually higher value as compared to the global telecom companies like Telecom Indonesia, China Mobile, and US based Verizon Communications. Sixth stock is Genting Singapore, and it owns the Resorts World Sentosa in Singapore. It has rebounded strongly post-COVID and is one of the must-go tourist hotspots in Singapore because it offers many attractions in one single place. So we are talking about Sea Aquarium, Adventure Cove Water Park, Universal Studios theme park, and of course a casino and hotels. Apart from the rebound in tourism numbers, especially from China, Genting Singapore has also a RWS 2.0 future master plan where they are spending billions of dollars to expand to adjacent areas from the existing plan. Okay, so from here itself, you can see that some of the exciting places that will make me revisit the place is the Greenified Forum Eatery, Minion Land, and of course the Super Nintendo World. Mamma mia! Okay, so Genting Singapore has a price to book ratio of 1.4 times and is in fact the lowest compared to other integrated resorts globally like Las Vegas, 10 times PB, uh, Cambodia's Naga Corp 1.4 times, so that's on par. But Naga Corp is based in Cambodia itself, so we are based in Singapore. There should be a premium on the valuation part. The last stock on our list is C Limited, or what we always know as Shop PPPP. Alright, so C Limited was initially founded as Garena in Singapore, publishing video game titles initially, alright, and today it has evolved into a global consumer internet company. C Limited operates three main core businesses: digital entertainment via Garena, e-commerce mainly in Asia via Shopee, as well as digital financial services via C Money. Okay, so in the past, one big concern that many investors have over C Limited is that it has been loss making for the longest of period as it continues to burn cash to acquire market share in many countries. But today, many would agree that they are seeing a turnaround as C Limited turned free cash flow positive right after they cut jobs, rationalize expenses, and streamline their operations. Okay, there are reasons to believe that C Limited can continue growing if we look towards the increasing demand for e-commerce services and the steady growth in their C Money division. Last but not least, let's do a quick comparison of the valuation for e-commerce players. As you can see from the table here, C Limited has a price to sales ratio of around 2.6 times. It is lower than e-commerce players in developing countries like Pinduoduo and Mercado Libre, but higher than other more established players like Amazon, Alibaba, or even Coupang in South Korea. Wrap up, these seven stocks represent Singapore's economic growth over the past decades. They are not only a source of pride for us Singaporeans, but may also represent some opportunities for investors. As Singapore celebrates its birthday, we can also celebrate the success and the prospects of these seven stocks. Happy National Day, Singapore! Okay, so next up, don't forget to check out this video over here to find out about the best retail REIT on our watch list. With that, if you find this video helpful for you, I will appreciate it if you can help me to tap the like button and subscribe to my YouTube channel for more Singapore and US stocks analysis. With that, I will see you next time. Thanks for watching and happy National Day. Bye bye.